We were expecting a weak August jobs report, but the actual numbers shocked everyone. The Bureau of Labor Statistics, the BLS, reported only 22,000 jobs were created in August, well short of the 75,000 estimate. To make matters worse, past reports were revised down sharply. Look at what happened to June. Initially reported the first part of July up 147,000 jobs. Then it was revised later to up only 14,000 jobs. And just this week, it was revised again to negative 13,000 jobs. That swing from a strong headline number to an outright loss matters. When June's 147,000 was first announced, mortgage rates jumped higher. If we'd been given more accurate numbers from the start, rates would have dropped, not spiked. Frustrating doesn't even begin to cover it. The August report also showed weaker job openings, with the VU ratio, that's vacancies versus unemployed, dipping below 1 for the first time since 2018. Translation, there are more now unemployed people than available job openings. Markets reacted fast this week. Mortgage rates are sliding lower, and futures now price in a 98% chance of a quarter-point rate cut by the Fed on September 17th. If you haven't already, now's the time to think about that refi. By the way, I'm licensed in Washington, Oregon, California, Hawaii, Arizona, and Florida. Just reach out and I'd love to run the numbers for you. Talk to you soon.